Good afternoon, good morning, good evening from any part of the world that you are watching this video. Welcome to my YouTube channel, and this particular video will be an enlightenment for many traders. Now, a request was made from a trader this week that I should do a top-down analysis from weekly to 4 hour on any pair, and um, and that's what this video is all about. So if you are joining for the first time, subscribe. If you are a returning subscriber, comment, like, share. You can also comment any challenges you are facing as far as the forex market is concerned. I will check the comment section and then do a video in lieu to that. So let's head over to and let's look at top down analysis from weekly down to H4. Okay, you need to understand something that when it comes to top down analysis, so I'm going to be using a pair that does not have a direct bias. Now, the reason is that if I use something like gold, I think I saw someone's comment like, okay, use gold. If I use something like gold, everybody knows that gold is bullish and we are all buying. So understanding the face and the environment of the market might be hard when dealing with such. So let me use GBP-CHF. Let me use GBP-CHF. And I decided to use GBP-CHF just because I love the price action. Now, I'm not going to just talk about the weekly. I'm going to talk about monthly. Now, when it comes to directional bias or understanding the market, there are two things you need to know. Number one, where is the market coming from? Then, where is the market going to? If you don't know where the market is coming from and you just open your chart and you join the market, there is a tendency of you just getting stopped out over and over or being carried away by the wave of the market. But the first thing you need to understand is, where is this market coming from? And the price action or the past price action will tell you where the market is coming from. Or the current, when I now say current, I can say like maybe the past month, the immediate past month, or the immediate past week can tell you where the market is coming from. Then you'll be able to know where is the market going to. And that will tell you your potential exit points. Because you don't just want to make profit at the long run, market will reverse back to collect the profit from you. And what are the things you now need to understand where the market is coming from and where the market is going to? Two things. Number one is structure. Structure. Number two is liquidity. Those are the major two things for you to understand where the market is coming from and where the market is going to. Now, I think I've done videos on structure, so I might not be able to talk more about structure. But this one thing, this is the easiest way for you to know where is the market coming from and where is the market going to. Your recent breakout on monthly and weekly will tell you the direction of the market. Note, your recent breakout on monthly and weekly, there's a reason why I did not include daily in it. Your recent breakout on monthly and weekly will tell you where the market is coming from and where the market is going to. Now look at this. Let me show you an example from GBP-CHF. Look at, there's a breakout here to the downside on monthly. There's a breakout here to the downside on what? On monthly. There's another breakout here to the downside on monthly. There's another breakout here to the downside on monthly. Now you can see that these three breakouts, if you look at it, market is selling. Market is what? Selling. Even presently now, we have just 2 days for this month to finish. We are having another what? Breakout to the downside on monthly. So which means that with this breakout that we're having, or I'm talking about the current price action, with this breakout that we're having on monthly, if the month should close like this, there's a tendency that uh, GBP will still sell further until we take out this low. Until we take out this low. Now, if you look at it also on weekly, you will see that the recent breakout on weekly also is to the downside. Let me remove all the drawing. The recent breakout on weekly is to the downside here. The recent breakout on weekly is to the downside here. Now, some people will now be like, oh, what of this? We have a breakout here to the upside. Why don't we consider this place as the recent breakout on weekly? Or why can't we say, oh, there's a breakout to the upside, automatically we are bullish? No, this is where the concept of premium and discount comes in, which is what we call range. Now, range is not, most people see range as a special topic, like, oh, range is a special topic for you to learn. Range is under structure. Now, what do I mean by that? Look at this. Let me go to monthly. I want to show you something about range. Now, if you want to learn about range, there's a video I did last 2 weeks on range. You can go and watch it. Look at, there's a recent breakout here to the downside on monthly. And I said something when dealing with range. I said, if you have a recent breakout on monthly, go to weekly. You will see a sweep and break. Your entry or your selling point will be above the B, which is above the second structure. Let's go to weekly so that we will see it also on this GBP Look at, very simple. If I go to line chart, let me change my line type to line chart. If I go to line chart, what do I have here? I have a sweep here. I have a break here. I have this I here that serves as what? Liquidity. Let me mark it blue so that you'll be able to see it. Now let me change the chart back to candle. Now, when I change the chart back to candle, this is our liquidity. I'm not going to be marking the body. I'm going to mark the wick. Can you see? The wick was taken out. Market tap into this, right? Okay, market did not tap into that. Market tap into this neck or a V shape that overlap inside imbalance, and look at market starts selling from there. So the concept of ranges can be included in structure so that you will not be selling when you should be buying, or you will not be buying when you should be selling. Okay, now let's now say we want to build my bias, because one of the mistake that a lot of traders are making, especially if you are using SLK or you are using key level, is that they remove structure from key level. They remove structure from it. Whether you are trading key level, whether you are trading CRT, if you remove structure from it, you are going to have problem with your trading mechanism. Now, how do I learn that? My pastor is a trader, and he was the one that I just showed my chart. He was like, each time you remove structure from this thing, you'll be having SL. And I remember that this thing is true. If I add structure, I have more win rate. But if I remove structure, I experience SL. So I incorporate structure to, because it is called SLK, structure, liquidity, and key level. So why are you now picking liquidity and key level and you abandon the structure? So now let's talk about bias building now. So which means that for you to now understand how to build bias, you must first understand the structure before you now move to bias. So if you don't understand structure and you are now moving to bias, you have issue with your trading mechanism also. Now we've discovered that structurally we are bearish. Now let's now talk about bias. Now when it comes to bias building, there are two ways we can build bias, which is through key level or through liquidity. I did a short video on this, and I said something that the best way to build bias is using the two. Yes, not just using one. If you can combine the two, which is liquidity and key level together, you have more win rate. which means that you have like an A shape, and you have what? You have a liquidity which can be a previous day or previous week. So, and what's the expectation? The expectation is that market should come, take out this liquidity, market should come, take out this liquidity, tap into this key level. This low must still be standing. Then maybe the third day, you are now looking forward to do what? To sell. You are looking forward to do what? You are looking forward to sell until this low is taken out, right? So that is the concept of bias building. Now, what do we have here? We have the same thing here. We have this range taken out, the range liquidity taken out. Not just that, we now have weekly reject weekly. We have weekly reject weekly, and also we have a sweep of previous week high. The sweep of previous week high. Now the low is standing, and aside from this low, we have this one also as a low that should be taken out. We have this as maybe our overall TP, which is this V shape as our overall TP. Now, because you have a sweep of previous week, we can now go to daily. What do we want to see on daily? A sweep and now look at this. On our daily, what do we have? We have a sweep and a break. Switch to line chart. Let's switch to line chart. We have what? A sweep and a break. Now, this is where it gets more interesting. Don't let me say it gets more confusing. Some people will now be like, this is a sweep and break. Market did not come back to market did not come back up before it starts selling. No, are you expecting market to come back up? No. Market can do anything. The expectation of the market, once you have your sweep and break, or sometimes when you have a double break like this, because we have double break. If I mark it out, let me mark it out here. We have this low to this high, we have this break, right? And we have this break also, this down part. Let me make it red. We have this double break. Market might not necessarily need to come up. Market can just use 50% of that break and start coming down. Now, what we've done on weekly to daily is to certify our bias. Now, you can now go ahead to now start building another set of bias from daily to H4. What do I mean by that? From daily to H4, what can we see? A sweep. Let me clean my drawing, sorry. I love to have a clean chart. A sweep of previous day high, right? The low is still standing. Now, why do I mark this low? Let me show you something here. Market did not just sweep this first one that I mark. Market sweep this one also. Market sweep this one also, right? So market sweep like 1, 2, 3 previous day high. Their lows are still standing, or the low of this second one is still standing. Now go to H4. What do you want to see? A breakout. So whatever you are doing on higher time frame is the same thing that you are repeating on lower time frame. That's just the mechanism. Anything you are doing on higher time frame, if you can repeat that same thing on lower time frame, you will not have any issue. What do we have here? We want to confirm our bias. Now understand that we've certified our direction from weekly already, but we are now building another bias from daily, because we discovered that daily did not come to this high here, to the high that we have here. Daily is not coming back there. Daily has given us another bias building. Yeah, so we don't necessarily need to start waiting. We've seen a sweep and break that is as a result of a daily bias building. It is not just anyhow sweep and break. This sweep and break is as a result of what? Of a daily bias building. Now let's mark, this is our break. This is our break. Now can you see? Sweep and break. And also we have what? Liquidity. We have liquidity. And not just that, there are different contexts in this place. We also have sweep of previous H4 high, the low is still standing. So now if I don't want to enter here straight, I can go, this is what, H4 reject H4, H4 sweep previous H4 high, I can decide to go to H1 and look for a breakout. Now there are different entry model, and I always tell people that breakout is still one of the best. That does not mean that others are not okay or they are not working, but from my own personal experience, I still prefer to see breakout as one of my best entry model. Now on H1, what do we have? A sweep and a break. And not just that, the next candle even serve as what? Internal range liquidity. But there's one thing about this internal range liquidity. On H1, it is single candle. But most time, if I want to use it, on M30, it should not be single candle. If it is single candle on H1, on M30, I want to see it as a structure. Can you see? If I switch to line chart, on M30, it is what? It is a structure. This is the structure. But I'm not going to mark the body, I'm going to mark the wick. So when I saw this, I was like, oh, this is nice. So your entry can be any key level above your liquidity. Even sometimes it is best that if your liquidity is on 30 minutes, your entry can be on maybe 1 hour or 2 hours. That is one time frame higher. Now if you look at 2 hour, can you see on 1 hour? Look, this is what on 1 hour, what do we have here? This is open close. Let's look at 2 hours. Do we have anything there? Look, it is an A shape on 2 hours. So I don't even need to go any other time frame. You can have your what? Entry here. You can have your entry here. SL to cover this high. This is 7 pip. Then you can sell to this. This is 6.3 risk to reward ratio. Now, let me reiterate something, but before I reiterate it, let me check something out, okay? Let me check something out, okay? Sure. Let me reiterate everything that I have said. Okay. Now let me reiterate everything I have said using silver. Now this silver triggered around the night, so I'm not in the trade, but let me just show you what I'm trying to say. Now, should I use silver? Silver also is just like gold. Everybody know that it's buying. Everybody know. Okay, let's pick another pair. Let's pick Eurocard. Eurocard is giving a nice price action for like weeks now. Now, the first thing you want to do when you are coming, let me open another Eurocard. I don't want to clear my chart. Eurocard. Let me use Oanda. Where's Oanda? Oanda, okay. Now, first thing you want to do is not to build bias. Don't make that mistake of saying you want to build bias first. What's happening to him? Let me add that I don't like this Oanda price action. Eurocard. Oanda, get out. Let's use FXCM. I'm seeing some kind of price action there that is different from what I use in forex.com. Forex.com is best when you want to deal with forex pair. Now, the first thing you need to understand is the structure before you even want to do weekly reject weekly, blah blah blah. And I said the best way to understand structure is to look at the recent breakout on monthly or on weekly. Now look at this. The recent breakout here on monthly is to the upside. Why do I choose to mark this one and not mark this one also? Because there's a breakout here. Let's switch to line chart. Let's see if we have a breakout here to the downside. Yes. Now, why am I dealing with this one and not this one? Because I understand that this one that is to the downside can be a retracement to continue the normal buy because look, Eurocard has been buying. So we are bullish on Eurocard. We are bullish on Eurocard. We've been buying for months, or let me say for years, sef, not even months. So the recent breakout on Eurocard is to the upside. And if the recent breakout, let me show you something. If the recent breakout is to the upside, if you go to weekly, you are going to see something like this. You are going to see a sweep and break. You can now have this break like this, but market will still come down to the extreme before it continue buying to the upside. This is the concept of what we call range. So that's why I always say range is still the same thing as structure. You just need to understand that people just prefer to call it fancy name. Now, the recent breakout on monthly is to the upside. If we go to weekly, let's mark the structure out. Can you see what we have here? We have a break here. We have a break. We have another break. Market comes, give us this. We still have another engineering liquidity. The market now is coming up here. So we took out this liquidity, right? We took out this liquidity on weekly. Now I can now say I want to build bias I want to start building bias. Okay, weekly reject weekly, blah blah blah. Now we have sweep of previous week low. Do we have any weekly reject weekly? So okay, though yeah, if you check previous price action here, I'm actually using a phone, so I might not be able to see it. You will see where this rejection is coming from, but I can build contests already. Why? We are sweeping previous week low. Let's go to daily. What do we have? On daily, we have a breakout already. Go to line chart. Now, because we now have breakout on daily, does not mean you will now enter straight because, oh, market is leaving me. No. Sometimes market is just doing a thing, trapping early buyers because it's still coming back to favor those of you that are patient enough to wait for the market. And what do you see here now? We now have what? Market spend like this is 1, 2, 3, 4, 5, 6, 7, 8, 9 good days to buy, or let me say 6 good days to buy, use another 3 days to sell, to now start giving us buy opportunity. So which means that you need to be patient for like a week. You need to be patient for like a week. Now, market comes back to this daily to give us what? A daily rejects daily here. Do we have any H4 breakout? Okay, we have daily reject daily there. Where is our H4 breakout? Yeah, we have H4 breakout here. Now, I know most time the confusion comes in after H4 breakout. That's where most people have issue. Once they have H4 breakout now, they'll be like, what's the next thing? Market is going already. After your H4 breakout, don't be in a haste to want to just say, oh, I want to follow it. Market is leaving me already. Go to your H1 and spot your strong high and your strong low, which is the bedrock of range. What do we have here? Look, that's why I don't like using FXCM. What's the meaning of all this gap? We have a sweep here, right? We have a break. We have engineering liquidity. Yeah. Now, some people might be wondering that why did I mark this as engineering liquidity? Why can't I mark this one? Right? I want market to retrace to at least 50% of my range, no matter the time frame, because this is where the range starts. This is where it ends. I will not be buying at that premium. I want market to retrace down to the 50%. So any liquidity I'm seeing above, I'm not relating with it. I already know that market is doing what? We'll come back to create engineering liquidity before it starts what? Going up. Now let me go to 30 minutes. It's so funny that we might see something on 30 minutes at that place. Okay, look at this. On 30 minutes, what do we have here? We have this one as liquidity. We have this place as liquidity. So if I will be looking for any buy opportunity, it will not be at this high, it will be at this low. So even if you want to buy directly from there. You can buy directly from there, from here, from this liquidity point. This is 13 pip, and then look at, even before market start retracing to give another entry, it's we're able to see this is like 8 RR, but that 8 RR, don't that, I call that imaginary TP. Even if you are taking this kind of trade, your TP, your normal TP should be this extreme high that we have here. The high that we have here. So if this is like 6 RR. So that's it. Understanding bias or direction is all about two things: structure, and then your ability to build bias, and knowing fully well that whatever you are doing on weekly can be replicated on daily. So if you are looking for, sweep and break, okay, sweep of previous week, daily gives you a breakout. Uh After that breakout, you are now waiting for that breakout level on daily, that market must get to this breakout level before I start. No, sometimes before market get to that breakout level, market might not, depending on the momentum. You too, you will see it the moment you start seeing momentum in the market. Don't expect market to come to that high, because it's going to take them a lot of money to push the market back to that high. So sometimes market will just create a new bias building model from daily and start doing its thing. So I hope this video uh, has helped, or sorry, can help you. So if you've gained value from this video, do well to subscribe, like, and share with your friend. So thank you very much.